Hi, this is Tim Hilterman with Whitcomb Hess, CPAs and financial advisors. We're trying to boil down all of this new information for you so that you understand your benefits through this coronavirus situation. Boil down some of the information from the CARES Act that was recently signed into law and how you could benefit and things that you should be thinking about. I have Aaron Bates here. He's a certified financial planner and principal of our wealth management division. Aaron, I want to jump right in. Let's talk about the CARES Act, in particular, the stimulus checks that we're expecting. Can you tell us more about that?
Hi, Tim. Sure. Yeah, one of the main things of the CARES Act is the stimulus checks that people will be receiving here in the next few weeks. Single filers in 18 and or 19 will get $1,200. So an individual who filed their taxes as a single taxpayer will get $1,200 so long as their income is under $75,000. Over $75,000 of adjusted gross income does get phased. The payment would get phased out up to $99,000 of income. Over $99,000, you will get nothing. For people who filed a joint return in 18 or 19, the income limit there is $150,000, so adjusted gross income of $150,000. If you're under that, each filer would get $1,200, so $2,400 total, and that phases out up to $198,000. So if you're over $198,000 of adjusted gross income, those joint filers would get zero as well. And then finally, in the stimulus checks, there's a $500 payment for each qualifying child. So a family of four who filed jointly and was under the $150,000 of adjusted gross income would get $1,200 each for mom and dad and $500 for each child. So $3,400 would be the total that they can expect over the next few weeks. And if your tax return has your bank account information and you've typically gotten a refund that was direct deposited into your bank account, you can expect the stimulus money to be received that way. Otherwise, checks will be mailed out from the federal government.
Okay. And you said you're based on your tax return in 18 or 19. So if you haven't filed yet for 19, is it going to be based off of your 18 tax return?
Yes, that's correct. Because we, even under the original tax filing deadline of April 15th, which has now been extended to July 15th, many have not yet filed their 2019 return. So the income limits are going to look at the last filed return, whether it be 19 if you've already got it filed, or 18 if you've not filed your 19 return yet.
Okay. All right. I understand the CARES Act allows you to access some of your retirement funds. Can you take us through what's available there?
Sure. So typically, if you're saving for retirement, adding money to IRAs, Roth IRAs, simple IRA, SEP IRA, or even a 401k, you are not able to access that money without penalty until after age 59 and a half. Well, with the CARES Act, that penalty tax has been waived for calendar year 2020. So now if you need access to cash, you can gain access to those accounts without tax penalty, which is typically 10%. Now, a deferred account, you would still have to pay the income tax that was due on any of those tax deferred accounts. So they're not tax-free, but there is no penalty tax for accessing those accounts before age 59 and a half.
Okay. And then I also understand that the income tax that you mentioned that will be due on some of those distributions. You have 3 years to pay the tax on those. And now let's go to student loans. For those holding student loans, what's the situation there?
Sure. Another provision in the CARES Act is the waive or deferment, I should say, of payment for student loans for 6 months. So essentially, through the end of September, if you have a federal student loan, you don't have to make a payment on that until the end of December, or excuse me, the end of September, September 30th 2020. So that's quite a nice provision too, to put those payments on deferment for 6 months till we pull through the crisis.
Yeah, absolutely. Finally, let's talk about reduced tax burden, in particular towards RMDs or required minimum distributions.
Sure. So for retirees aged 70 and a half and older who were already taking required distributions, or RMDs as we call them, many take money out on a monthly basis to provide their retirement income. However, there are some who don't need those dollars, but they're forced to take the money out. And they're forced to take the money out or pay a huge penalty. Again, the penalty for not taking a distribution has been waived. So if you don't need the money for retirement income, then you can leave that money in the IRAs at this time and not be assessed any penalty for those distributions. And that's a very attractive thing right now, especially with the markets being down substantially so far year to date, to not have to take out any money at this time and allow those funds to be there for a recovery when we do get one.
So, and that's all well and good. What happens if someone has taken out an RMD already? Maybe they were proactive, and have they just missed the boat, or is there any potential there?
Yeah, actually, IRAs especially have a provision where there's a 60-day rollover rule. So if you pull money out and then you want to put it back, you can do so within 60 days and you're not taxed on that distribution. Now, one little caveat of that is many times when people pull those distributions, they have tax withheld. So if you do decide to do one of those 60-day rollovers to put that money back, to avoid all taxable distributions, you would have to put back any tax withholding as well. So for example, the full distribution was $10,000. If I had $2,000 withheld for tax and I got a distribution of $8,000, I need to find a way to get the full $10,000 back in without having the other $2,000 being a taxable distribution for the year.
Right. Okay. Well, there's a lot of information covered right here on this call. There's probably more coming, and strategies and things to think through. We're trying to keep you up to date at Whitcomb Hess. We've created a webpage on our webpage called whitcomb.com/COVID-19. Check back there for more information. Aaron, thanks for joining us, and stay tuned.